Hello and welcome everyone to the week ahead commodity report for the 18th to the 22nd of March 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we will be reviewing platinum, silver, gold and crude oil for the week ahead. So first of all, let's just have a look at some of the major movers over the last few days. On Friday, we saw palladium breaking out to all-time highs amid expectations that China's economic stimulus would drive demand for the auto catalyst metal. Also last week, gold broke back above $1,300 per ounce, notching up a second straight week of gains as the dollar dipped on weak US economic data, and silver gained over 1%, trading back above $15.30 ahead of next week's FOMC statement. Meanwhile, hedge funds and money managers, they raised their bullish wagers on US crude oil again in the latest week as prices hit a 2019 high, supported by signs of tightening global supply, whilst hedge funds and money managers, they cut their net long positions in COMEX gold in the latest week. So with that, we'll move over to the charts and we'll talk you through our forecasts and key levels for the week ahead. Firstly, moving over to gold, over the last week, we did see gold break back above $1,300 per ounce. In fact, last week we had seen the breakout off the back of a weaker than expected non-farm payrolls, and we suggested that it's often the case that on the Monday after the non-farm payrolls, we often do see retracements and the markets can give back some of the gains from the non-farm payroll. That's exactly what happened on gold here and actually provided us with a great opportunity to buy back in at a lower price. At the Gold and Silver Club, we bought back into gold at $1,291 per ounce, targeting $1,311 per ounce. In fact, at the beginning of last week, we did see gold springboard off $1,290 per ounce and continue to get supported as we had quite a lot of chaos and fear revolving around Brexit last week, which did give gold the safe haven bid, and we saw gold break all the way back up towards a 21-day moving average, which resides at $1,310 per ounce. Now, last week we continued to notch up our trailing stop loss. We banked here 120 points on our long position on gold. We banked 200 points on our crude oil position, and we also capitalized on positions on the commodity currencies such as longs on Australian dollar, US dollar, and sell shorts on the US dollar, Canadian dollar as well. So it's been a very profitable week at the Gold and Silver Club, certainly taking advantage of the chaos caused by Brexit over the last few days. Now, as we go into next week, what do you need to be aware of? On Wednesday, we have the FOMC statement. And as we get closer to Wednesday's FOMC statement, this really should be decision time for gold here. I would take a look at the weekly chart, first of all, for gold here. And you can see very clearly where we have got a higher low, a higher close, and also a higher high. And gold here has broken above the previous week's high here as well. So overall, that is a bullish price structure in that sense. However, we do need to be mindful that as we continue to progress into next week, we do have a price structure which could be determined as a bear flag. And it really depends on which way this breaks as we go into next week. So you can very simply just draw a pennant formation on gold at the moment, and you can see where the price structure is also being limited with resistance at the 21-day moving average and also this downward trending channel on gold, but you also have support coming into gold as well. So what we need to do as we go into next week is get a resolution here on gold. If gold starts to roll over, breaks back below the weekly lows here, then we could certainly start to see a move taking the price back towards 1290 and 1280. In fact, the next major level below that, if we were to get a continuation pattern to the downside, would be $1,276 per ounce, which is where we meet support going back to mid-January here and also mid-December as well. That would be a very important level, $1,276 per ounce. On the flip side of that, if gold can maintain a bullish price structure as we go into next week, and if it can break back above Friday, Thursday and Wednesday's highs here and close back above the 21-day moving average and effectively break back above $1,311 per ounce, that is where we could start to make a move back up towards the next major level of resistance, which resides at $1,325 per ounce. So as we go into next week, it might well be Wednesday's FOMC statement which does provide the catalyst and decision here for gold. I am mindful that hedge funds and money managers, they've cut their net long positions in COMEX gold in the latest week again here. So I am really looking to see which way this is going to break as we go into next week. Now, moving over to crude oil, well done if you capitalized on this move over last week. So we discussed on the week ahead report that we were essentially looking at a bull flag formation here on crude oil, and we were looking to capitalize on this. Break above the weekly highs would lend towards a long position, and we were essentially targeting 58 to 59 US dollars per barrel. We've now hit profit on our long position on US oil over the last week, banking 200 points on this trade. So we're now looking at our next entry on oil. As I've mentioned a few times before, ultimately I am looking for US oil to get back to 60 US dollars per barrel. Normally over the month of March, it is a bullish time of year for crude oil. Your average return for this time of year is 2.6% to the upside over the month of March, and actually at the moment oil is up 2.1% so far this month. So we are definitely following the normal seasonal cycle here for oil. If you have a look at where resistance has come in at the moment on the chart, it has found resistance around 59 US dollars per barrel. As we go into next week, I'm still looking at pullbacks as buy opportunities here. So if we do get some pullback, certainly back to this previous level of major resistance here, ideally on oil would be a pullback back towards the low end of the recent channels here, especially if we can pull back to approximately 57 US dollars per barrel. If we get a pullback to that zone, which does get supported, I would look to buy back in again here on oil with a view to springboard higher. Ultimate target of 60 US dollars per barrel here on oil. The only way that I would see that being invalidated would be if we were to get a break and a close back below this major channel here, back below also the 21-day moving average and this underlying trend channel as well. If that was to get breached to the downside, which would take quite a considerable move to the downside in order to actually breach this bullish price structure, but if that was the case, then we would hold off and just wait to see how the price does develop. But at the moment, certainly oil is looking bullish. Now moving over to silver, we discussed this in detail after the breakout that we saw from non-farm payrolls. Very much like gold, silver last week ran up all the way back towards the 21-day moving average, found resistance at that zone, then started to roll over from Wednesday. You can see we've had a revisit back towards the $15 level here. In fact, on Friday, silver closing at $15.24. If we move over to silver on the weekly chart here, we've got some indecision, but definitely overhead resistance at that $15.50 zone right now. And certainly next week, again, I do think Wednesday's FOMC statement could be a catalyst for the next move here. Normally, gold and silver over the month of March, they underperform. April is a much stronger month. Normally, they're negative over the month of March. And we've certainly seen that quite a lot of backing and filling since the end of February here, where in fact on the very first day of March, we saw considerable sell-offs on both gold and silver. Gold sold off by more than 1.5% on the 1st of March. So where the price structure is here as we go into next week, it does look weaker than the price structure of gold. If we were to roll over, break back below the lows here from Thursday and Friday, I would have the expectation that we should come back down towards the 15 US dollar per ounce zone. And if we do that, I would look to see if we get evidence of support coming in at that level, because if we were to flush out below that zone, we've effectively got then clean air until we come back to approximately $15.60 per ounce here on silver. Very much like gold, you could also argue that we are within these downward trending channels at the moment, and that might pick up momentum if we were to continue to break down as we go into next week. It really is dependent on also Wednesday's FOMC statement and whether the US dollar starts to catch a bid at the beginning of next week in the lead up to the FOMC statement or not. So again, I do think we are at a decision point here for silver. Silver really needs to break and close back above $15.50 per ounce in order to then confirm a buy here in the short term. Otherwise, we could be vulnerable to another retest of the swing lows, but usually, very much like gold, silver performs very well over April. So we've got a couple of weeks left of March where we could still see the metals under some pressure. Now moving over to platinum, as we mentioned several times on previous reports, we would be interested to buy platinum if it was to revisit 800 US dollars per ounce or lower. It also has indecision into the close here on Friday. You can see we've seen a reversal to around this major resistance zone at 835 US dollars per ounce. Note as well where platinum has had a failed move to really break and close above the 21-day moving average as well. It's continued to find resistance at that level. As we go into next week, if we have a look at the weekly chart here for platinum, we do have an inside candle and also a reversal candle to a certain degree. If we were to break below the weekly lows, that is really where platinum could be vulnerable to then a corrective move back towards 800 US dollars per ounce or lower. Again, very much like gold and silver, normally platinum does not perform as well over March, and we will be looking to get an optimal entry for a potential rally into April if it does pull back further. It's still possible that platinum could rally next week, and it really depends on how the dollar responds as well to Wednesday's FOMC statement. If platinum was to rally here and springboard higher, what it would need to do would be to break and close back above this $830 per ounce resistance zone, and effectively break and close back above also the weekly highs here as well. So if we were to break and close back above $850, that could then put us back in the upper end of the range here, where you've got $876 as resistance. You could also suggest that if we do break below Thursday and Friday's lows, you might have also a bear flag formation where you could see a revisit back towards $800 per ounce. I would also look out for that potential too. It might give rise to a sell short opportunity. And of course, on the flip side of that, if we were able to break back above Friday's highs, break back above 850, that then puts us back within the range here of 850 back towards $876 per ounce. Now, as always, we've got a lot of news items as we go into next week. We've still got more uncertainty over Brexit as well. It's really providing a lot of great opportunities on the metals at the moment, and also the commodity currencies too. If you would like to join us at the Gold and Silver Club and also get access to the trades that we take and all of the research that we provide to our private members at the Gold and Silver Club, there is an opportunity for you to join us. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also get real-time trade alerts, which include trade management, the exact trades that we are taking ourselves at the Gold and Silver Club. You get access to our trading research and market insights. You have your own private members academy membership site logins, so you can log in, review our research, all of our training material, as well as our strategies and market insights. And of course, you have access to support and one-to-one mentoring as well. For more information about the service, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this report, so just click on the link, make an application, and we will of course get in touch with you. And do make sure you also subscribe to our YouTube channel. That way you'll be kept updated with the latest commodity reports.